Hey, Willie.
What do you want? Why are you ruining my day?
I don't know. I think we have a lot of listeners that apparently like to listen to our podcast, so that's good.
I think they just like listening to us bicker like an old married couple.
Yeah. But I guess we give some good insight, which is good. We got a lot of good feedback from our listeners,
Yeah,
and we're on Apple and Spotify, so that's
that's
cool.
true. That's true. We're influencers now.
Apparently, I was on Bloomberg.
Yeah, Bloomberg Radio. I saw that. I always knew you had a face for radio, but I don't know why they recorded you as well.
Yeah, I think it was Bloomberg Radio, and at the same time, Business Week podcast
Mm-hmm.
and Bloomberg TV. I don't know. There was a camera, there was a recording. People saw my face. I thought it was just purely radio.
Candy was
Regardless,
exchanged.
yeah. Regardless, I was on Bloomberg, and they wanted
Congratulations.
me to discuss the outlook for crypto, SBF, and just financial innovation in general.
Ah, yes, corruptocurrency. How much hate mail is this episode gonna get us, you think?
Well, I know from the Bloomberg interview, the amount of DMs I've gotten, the amount of hate I've gotten, it has been incredible. But we've always had an incredible hate towards us and dislike towards
Yeah.
us when it comes to crypto. But I stand firm with our position. I remember Matt and Paul, the hosts on the show,
Mhm.
took a pause when I called it and what we believe crypto being a Ponzi scheme. And it absolutely is a Ponzi scheme.
If you watch the video, you can see the host like visibly gulp, like, "Oh my god, I have to say something, or my career is gonna end because of this guy." Like, for legal reasons, I have to ask you. No, that's a good point. Well,
Because it is a
let's
Ponzi
jump right
scheme.
into it. A lot of them
I
is.
mean, it is a Ponzi scheme. Look, the only crypto in quotes crypto because crypto is such a broad term, right? The only one that I give a chance will be
Mhm.
Ethereum, and the only reason why is Ethereum is what we call or what is called a blockchain platform, which you and
Right.
I have discussed about blockchain. And blockchain we see as good potential, right? It
Yes.
operates as a ledger,
Mhm.
and it provides higher security and greater transparency towards transactions.
Yeah.
And so that as a utility, we see value with Ethereum. And then everything else, not really. We haven't seen anything else that has really been of value. I don't care if it's what were those? I don't care if it's the tokens and the currency
Mhm.
itself
Mhm.
or the NFTs, which that blew up. And
Both directions, right?
right. And the reason why we call it a Ponzi scheme is because 99% of crypto are Ponzi schemes. If you look at these
Mm.
organizations, quote unquote organizations, right? Or these crypto projects, I don't care if it's what is it? Phantom. I don't care if it's what's the one Do Kwon, whatever the hell his name was.
Oh, Terra Luna or
Terra Luna. I don't
yeah.
care if it's Binance. I don't care if it's any of these guys. They're all a bunch of Ponzi schemes one way or the other. They move an investor's money to another investor to cover their gaps. That is literally the definition of what a Ponzi scheme is. They don't provide any value. And when you go to these offices or these projects or you meet with the team, it's practically a fraternity house of failed finance professionals. It's pretty much what they
Yeah, the
are.
finance bros, or they want to be finance bros. It's you're right. There was one algo coin. So for our listeners who have better things to do with their time than waste it on crypto, algo coins I like because it's in theory, a mathematically stabilized so-called currency, and we can get into why it's not a currency later. But if you have your your token that's moving off peg, you can either print or redeem support coins to drive it back to peg. So that's the really simple view of it. But it's cool in theory because I like the fact that that you have something that's fair, that is numerical, that cannot be influenced by politicians or other social detritus. But when you examine it, and this is something that we brought up with one of these individuals who I won't name because I don't want the taste of that failure in my mouth. Your utility, for something to be useful, currency is only useful because you can use it to do something, right? Dollars are useful because I can go buy food, I can go buy fuel, I can do whatever. But it's backed by, right where it says right there on the bill, the full faith and credit of the United States, aka our armed forces, and that's what gives it some stability. That's what gives it some acceptance. A lot of these algo coins, they have value because people buy it, because people say it has value, but you can't, its only value is to stake it to facilitate swaps or to trade it or whatever. But the value is only there because more and more people are buying into it. And, it has no innate utility. Like, that is literally the definition of a Ponzi scheme. If I buy one of these coins, it's going to increase in value, or it's going to become more valuable on a USD denominated basis because I convince you to buy into it.
And it sounds like Amway.
Bro, well, I was going to say, it sounds like you're probably too young to remember the 2x2.net pyramid scheme that was all the rage. Oh, God, in the late 90s, early 2000s, especially in like LA County, Koreatown, Chinatown, certain parts of downtown, you'd have these Lambos and Ferraris that were, painted obnoxious, Dayglow vomit pink, and they all had 2x2.net on it. And it was like, you sign up, and then like you get two people to sign up, and they get two people to sign up, but you sign in at a certain level.
Right.
And then the more people get
it sounds
tricked
like
into
Amway.
this garbage. It does sound like Amway. It sounds like a lot of these coins as well. And I don't, I know Bitcoin's on a tear again, and everyone's saying it's going back to, 400 million or whatever. I honestly really hope that most of this stuff just implodes. Was it BlackRock, right? Started the
BlackRock
ETF.
Ethereum ETF, I believe, and then someone is with Bitcoin, whatever they're doing.
Right.
Yeah.
And you can't use that as an excuse of, well, this is legitimate because look, this gigantic financial behemoth is involved. Just because they're involved doesn't mean that it's worth anything. Remember, all these gigantic financial behemoths were involved in credit default swaps in 2008. Right. How'd that work out?
Right. And the point I was going to make is, what is BlackRock? They are an asset management firm that makes money of what? Managing assets and making trades.
Yeah.
And they get fees off of that. So they could care less if it's Bitcoin, Ethereum, or whatever. They make pure money off of fees of trading and managing that. And so long as it is legal and compliant, they'll do it because there's a huge opportunity for them.
Right.
So it does not make it legitimate of a currency because they're doing it. They're just making fees. And like you said, mortgage default swaps, and now they're trading, which we'll talk about in a little bit. They're the risk. What was it?
The hedge fund, like absolute risk transfer or something. So, I got to be honest with you. I read that article several times. I can't make any sense of how the hell that's supposed to be a good idea. I've talked to, my finance bros that are all quanti into this stuff and a lot smarter than me. And they're sounding a lot like, these crypto pushers from a couple years ago. I do foresee, that's going to end very badly.
Risk transfers.
Synthetic risk transfers. Thank you.
Remember the last time we heard synthetic?
Yeah, it was a synthetic CDO.
Yeah.
A CDO of a CDO, as was it who the hell's that guy from Big Short?
So we had risk problems from a standpoint of default swaps and the mortgage industry in 08. What do we have now? We have a debt problem, corporate, government, overall, right? Consumer debt. And now we're trading that synthetically. That doesn't sound good. But let's get to that here in a little bit. Going back to the crypto, the big point I was trying to make is, yes, it's a Ponzi scheme, but the whole mission of what crypto is about, right? Their vision, their passion, aside from being wannabe finance bros and all that, is they want to push decentralization and they want to empower people, right, with their own finance, and they want to better the financial system.
Right.
Well, how's that going? They have hurt many people. They've hurt many even famous people, right, on that. And if you actually look at the fundamentals of crypto, I said this during the Bloomberg interview, which is they're trying to say they're the most innovative thing. Well, you and I can pay each other real quickly right now by sending Apple Cash via text, which is Apple Pay. We can Venmo one another. We can Cash App one another. We can Zelle one another. And there's other ways of doing it, right? So electronically, digitally, that's already there. And then obviously there's cash between one another, and we can tap credit cards or whatever by using Square. So there's already a lot of this already existing. So the whole thing about it being easier to use is not necessarily true. And then on top of that, they talk about transparency and security. Yes, it's on the blockchain. It's out there, right? It's transparent in that point of view. But if you look at the actual transactions, I for our listeners to understand, we actually dabbled into this because we wanted to learn, right? Yeah. But we also wanted to learn before we go much bigger. Now we lost some money on it, but but it's one of those things where it's discretionary money, so we didn't use money that we needed. So that's another lesson in finance. Don't invest or spend money you can't afford to lose. But going back, if you look at the transaction page, you see the time, location, what blockchain it was on, but you don't see names, you don't see the purpose. All you see is this really long numbers, like a barcode. And okay, that's transparent, but that is a major way to commit crime and money laundering, right? Again, adding on to the Ponzi schemes. At least with Venmo, bank transactions, Zelle, you can see what's going on if need be, right? So, but that's already happening. So the same screenshot that we saw when doing these transactions, it's already happening behind the scenes at financial institutions. Then you also see it up front. When I Venmo you, it's right there. It's actually a nice, funny way though. Like we can say this transaction,
like a social media feed.
Yeah, it's like, hey, birthday cake emoji or an eggplant emoji, which is funny. And
you better not send me an eggplant emoji. I will refund that transaction immediately.
Right. And then the last point I'll make is, so on top of all that, to actually manage your quote unquote currency or your tokens or whatnot, and then to do the transactions, it's so much more complex, than what is already there currently, right? I mean, I think I have one still here. So hold on. I have one. Yeah, I brought it up because
you still have a ledger.
Yeah, I still have a ledger because
I burned mine physically.
No, I kept it because it's a reminder of how idiotic crypto is, and to remind myself to do even further diligence on anything that we do. So this is a ledger, this little thing, right? It's a glorified USB drive. And in order to do anything on crypto, so again, to our listeners, right? The whole goal of crypto is to change finance in a good way, okay? To make things easier, better.
It's a noble purpose.
Right. But they're executing piss poor. So this ledger, so in order to get involved, right, you have to have one of these ledgers, right? You have to, these ledgers, in order, you have to create some code passwords to open it, and then you have to activate it and remember 28 words or something like that. If you lose the password or something.
No, the passkey, yeah.
The passkey.
So depending, I think some of them are like 12. I have one of those.
It depends,
like 24,
right.
24 word phrase.
Right. And then you have to connect it to your laptop. Then you have to open the blockchain you're going to be a part of. And then you have to use one of the hubs to move US dollar or whatever your currency is into the platform. And then you can start trading. And then you want to convert to real money you can use in real life. Same process. But this is everything for you. So if you lose it, you're fucked. Right?
Yeah.
Excuse my French there. And all this. So, but if you think about it, for everyday people, right, and which is 99% of the world, or I don't care who you are, it's not everyday people or even it's just anyone. Life is already complicated as it is. We deal with a lot. You know, managing money is already a lot, and you have enough to do. The last thing you want is, in order to to handle money and to do transactions, is to go through a million fucking steps. Excuse my French again.
You're gonna get us demonetized.
Yeah, I apologize. So
apologize to my wallet, my real one, not that that USB garbage.
So I imagine our listeners right now, they're already confused. And a lot of these crypto bros try to explain it in such an easy way. Oh, it's not that complex for your security and all that. Look, it's already secured as it is. It's all going to have flaws. I mean, crypto's already have so many of these projects being rugged. There's already so many people that have their funds stolen or hacked. And it's just like the traditional system. And I remember the Bloomberg interview, Matt Miller made a really funny analogy saying, well, the dollar is probably one of the most abused and corrupt currencies. I'm like, well, yeah, because it's so massive. Yeah. And there's so many altitudes or many different ways of handling the dollar. But it's crypto's no different. And if anything, crypto makes it more efficient because it's complexity, right? Because it's anonymous and it's complexity. Anytime you hear how complicated it is to get your money or to move money, usually there's something wrong. And he said, well, you can stuff money into a duffel bag, transfer it. Those ledgers are just modern duffel bags. Like I can transfer you now anonymously. No one else used to know. $1 billion in whatever, that's called the Vinh and Willie token. And it's
someone's actually going to launch that just to piss us off.
Yeah, and it's equivalent of $1 billion, right? US dollars. And then you can go off and do whatever with it, and no one needs to know. So
here's the problem.
There's nothing different.
Yeah, well, no, there's so what you have there's the hardware wallet, right? And that's the one with all the idiotic steps. I mean, the software wallets, whether it's MetaMask or what is that with that stupid little rainbow one for your phone, whose name I forget, doesn't matter. Like they're a little easier, but here's a couple of problems that I have with it. Number one, it's not actually anonymous. Okay, it doesn't have your name attached to it, but if the blockchain is a public blockchain, which most of them are, it's like, oh, well, account of gibberish moved this many, altcoins to this other account, and you can just click and trace, the entire transaction history. Sooner or later, you have to move it off the blockchain into real life, right? Sooner or later, you're coming back into the banking system, whether you like it or not. And what people don't understand, when these crypto bros are certainly trying to ignore, the banking system, at least in this country, is secure. Okay,
many other countries too? Many
other, yes. And the tier 1 countries, the US, UK, Switzerland,
Japan,
Japan, absolutely, those types of countries. The banking system is secure. The legal system is highly evolved, so that if you are screwed over financially, you have banking support, you have the legal system support. You can be
insurance.
You have insurance. It's a
The
pain in the
United States, FDIC. Yep.
FDIC, filling out FDIC claims is no one's idea of a good time, right? But you have it. It's there in case. You have banking secrecy laws. You have know your customer laws. You have all of these regulations that are put into place to protect you. That's what I think the disconnect is with the crypto bros. It's like, well, we don't trust the banking system. They're thieves. No, okay. Chase has never been rugged. I can't even remember the last time I read an article about Chase being hacked and having anything stolen. Yeah, customer IDs, whatever, but they have records, and if something happens to you, you can reconstitute your account. You can still be made whole. Okay, most of these platforms that get really popular, they eventually get rugged, because at the end of the day, the people that are building and maintaining these blockchains are not very smart. And that's
or ethical,
hate mail,
or
and
ethical,
or ethical, and that's going to give me some hate mail, and I don't care, because it's true. If they were that damn smart, their platforms wouldn't get rugged. If they were that damn smart, their coins wouldn't get stolen. They would actually have a secure system. Does crypto have a place in the world? Yes. You go down to the Las Vegas Strip, there are a couple tattoo shops that only take cash or Bitcoin. Why? Because they're evading taxes. Okay. If you go overseas to, I don't know, Russia or Ukraine, which are not exactly the most stable regions right now.
Well, and also Hamas and Iran.
Or Hamas. And Hamas love crypto.
Yeah, they're getting funded.
Hamas are getting funded through crypto. Are they getting funded through US dollars? No. Because anytime you say, well, where does this dollar come from? You have to establish some provenance. There's a banking transaction history that is attached to that dollar. You don't have that with Bitcoin. It's great if you are in an oppressive regime and you need to, do money things to finance your life. But guess what? Even then, you're still technically a criminal because what you're trying to do is outlawed. Yeah, your regime is oppressive, but let's not be cultural imperialists. Let's just focus on America, and other countries can do whatever the hell they want. But the only use for crypto as a so-called currency are these nefarious acts, or are to hide things. We talk to people all the time like, well, I only transact in crypto because I'm not going to pay taxes. Well, that's not how this country works. I don't like paying taxes. I would like to pay the minimum amount of tax that I ever owe, because I don't want my money to go to the government unless it has to. But the minimum amount of tax that I am responsible for is never zero, right? You always owe something. So they have this mindset of, we're going to eschew the financial system. We're the financial freedom fighters, and they're misguided idiots. And I'm glad that SBF got taken to trial. I hope he rots in prison. I also want to know who the hell he paid off to do his trial portrait, because they painted him like a brunette Thor, and they drew up Caroline looking like a tub of melted ice cream.
Look, I want that artist to do.
I want that artist to do my portrait.
Yeah, not from a court, but just any portrait, right? Like I want one on my giant wall in my living room.
Like dressed very regally, holding a scepter or something like that'd be cool.
Yeah, and to all those points, which are spot on, is again I made this point on Bloomberg, which is crypto is barbaric. It is, yes, they have the right intention, some of them, right? The whole idea, but it's barbaric. The reason why we have the system we have today is because we've evolved over the centuries. We've evolved. We have financial system in place. We have currencies. We have laws, all because we've learned from what? Human behavior, human psychology, how humans function. And, the whole notion of crypto decentralization, that takes us back centuries. And I know during an interview that kind of took, I think, Paul aside, saying, how does this take us back? And I'm just saying, with hundreds or thousands of these tokens that anyone can create. I mean, any of our listeners right now can create one as long as you're great at marketing and know how to run a Ponzi scheme. You can get a lot of money from it.
Oh, they even have websites that just let you create your own tokens. So like your blog, it's like drag and drop now.
Yeah, it's barbaric because a system cannot function when you have hundreds and thousands of these tokens, which you don't know who's behind. And if you do know, do you trust them? Do you know they're actually going to follow through? Because a lot of these guys, again, they'll rug, right? They'll leave once they hit a certain number. Yeah. And to society to have all of these options of tokens and try to function and try to purchase and make transactions, it's not efficient. It's ineffective. It's inefficient. It's a waste of time. It's just useless, and it takes us back. It's like the bartering system again. Hey, I'll trade you 3 rocks for one of your plants, right? Or whatever. I don't know. 10 ounces of water, whatever it is, or however they. I mean, you look at history of currency; it's fascinating, right? What they did. I mean, they literally carved rocks with symbols on them, and
the rice transaction.
Yeah, exactly.
Yeah, they actually couldn't move those. They transferred ownership, but the rocks, the stones themselves, a lot of them were too big to relocate.
Yeah. So, if anything, crypto's taken us back to a barbaric system, taking us back centuries. It's not really advancing society or finance. And when you said, they're trying to be these financial saviors and all those sorts, they're not really doing that. And one of the final points I made during the interview was is that if you look at finance, and I'm talking about this to the whole system, not just crypto, but also with fintech and with the traditional financial system. Because to be clear to our listeners, the traditional system is also flawed, but it's still far better because of, again, regulation, established systems in place, processes in place. And when you're in your pillar, you know what you're doing. When you're a bank, you know what your job is. You're a bank. Yeah. If you're an investment bank, you're an investment bank, right? Yes, it could be under one umbrella, but it's separated by pillars and it's regulated differently. Make that very clear. Crypto, it's a free-for-all, barbaric, Wild West type of structure. You don't know who the hell you can trust, and more than likely your money be lost and get rugged, and all those sorts of things. But the notion of innovation, I hate hearing that from crypto or even from a lot of these fintech companies, right? Robinhood and all these types. You haven't really seen real actual innovation of products, financial products. We've seen great innovation when it comes to finance electronically, right? Yes. Venmo, PayPal has been fantastic. It changed the game. Even
though Robinhood gets a lot of crap, I still use Robinhood.
Yeah,
I don't care if I'm a product for Citadel because they make my life easier to invest. That's all I care about.
And but what they've done is, again, it's clever. It's innovative from a standpoint of being able to put access or provide access to many retail investors in an easy way through an app to trade, invest in the stock market, right? Yes. PayPal, Venmo, Cash App, Zelle has made it so much easier to transfer money to one another, to peers. Yep. And now you see Apple Pay and Google Pay and the ability to easily pay for things straight from your phone, right? Apple Pay Tap, you connect your credit card on there. So that's all been fantastic, and it is. I mean, it's very revolutionary. I agree. Yeah. But product itself has not actually been innovated. Products, okay, and crypto doesn't do that. The last really meaningful, impactful innovation in the financial product was in 1993 when ETFs were introduced. And
the dawn of passive investing,
right? And ETFs, ETFs have been fantastic, and most of our listeners probably have money in ETFs through their 401k or through their pension, mutual funds, retirement, all those. You have more than likely all of us, I know you and I do, but most of the listeners have their money in there. And the reason why it's so innovative is that why select a few and take so much time and have to do your homework and all this? Because most people don't have time to do that, or the knowledge or the desire to trade stocks and to invest in the market and all that. But to be able to win from the overall market, like S&P 500 ETF and all those available funds, is you'll win in the long term. It's long-term investing that invest, not bet, invest in America and in our markets for the long term. And if you look at it, you zoom in, there's some ups and downs like that, but you zoom out, it's a gradual 45-degree angle upwards towards the right. And that's what needs to happen, is how do we make products more innovative? Because we obviously have so much data on human behavior, human psychology, right? I'm big on that, and how people operate daily, and especially with money. So we need to create products around that. So that was really the point I was really making through that interview, is that's what needs to happen. And crypto is trying to act that way, but they're not doing anything in regards to that. They're just making it easier to money launder and commit crime. And the traditional system doesn't really care, because they continue to get bailed out. And look, a lot of the products are great, right? But they're comfortable with it. They're making a lot of fees. It's in and out, black and white. It's easy.
Why rock the boat if you're making billions upon billions?
Right, and we can't blame them. But that's where we come in which we can't really say much. And I hinted at this on Bloomberg, is we have spent years on this, because we've seen 08, we've studied history on the recessions. We're seeing the recession coming up, and the way things are done can be changed, and where banking does have to change, all those sorts of things, right? All the traditional, the core platform, the core base of our society and financially can stay the same. It's just we're going to completely rock the boat from how people operate, and have better options in financial products that can benefit them. Because families, everyday young professionals or whomever, we have to worry about work. We have to worry about our private life. We have to worry about all these million things, and also taking care of ourselves. The last thing we want to do is spend so much time in dealing with money. So we're coming out with a product that is going to be really innovative, and where it completely restructures how we do finance on a daily basis, and where it drives down debt and at the same time drives up wealth. Literally at the same time, and you don't change your habits when it comes to your financials, which is remarkable. And we look forward to announcing that soon. And I hope this has been very helpful to our listeners from a crypto and innovation standpoint. And I know from the select group of folks we've spoken to about this product, they're really excited, because they see it. They see, wow, this is an innovative product. You're not just, it's not just another fintech company doing something electronically. And okay, cool. But there's actual product that will help them and doesn't disrupt their habits. And
honestly, the blockchain stuff, I think, was misapplied. Like we talked about before, I personally like the concept of a blockchain. I think it's kind of cool from a science project perspective. Is it worthwhile for banking and finance? No, obviously. But NFTs, yes, the infamous stupid cartoon monkeys kind of imploded. But if you think about blockchain systemically, it has a lot of potential. Like when my book was published, I actually wanted to know if we could have a version of it as an NFT instead of just a PDF. Because as soon as you release something in PDF, if you're an author, you got about 2 hours before someone in India or China copies it and distributes it, and that's not that's not me being racist. That's literally how I got my hundreds of textbooks on PDF, as I went to sites that were hosted in India and China, and I downloaded them. But something like an NFT for a secure piece of information, like a book or something like that, that is obviously not I don't want to say not hackable, but it's more difficult to steal from an outside source. That is something that you can verify and that you can truly own. I think stuff like that is pretty cool. We also talked a couple years ago when one of these people well, what could be applications for crypto that don't involve just coins? Like one of the few ethical people in this universe. I said, well, what about pairing that with real world sensors for waste management, for carbon measurements? Obviously the carbon markets are hugely profitable, but they're much like the commodities markets. The money is in trading the paper, not necessarily the actual good. But I think the possibility when you start fusing it with real world hardware, that can be potentially useful. That's my lip service to
and that's a positive.
Crypto bros. But yeah,
I totally
currency,
agree with that.
no way in hell.
Yeah, I totally agree with that. I think the positive thing out of crypto is the technology itself, the blockchain, the NFT.
Yeah.
I think the outlook for crypto, in which I didn't have enough time on Bloomberg because apparently the lively commentary of calling
you were going to
Ponzi
go off the
scheme.
rails.
Yeah, so we kind of did go off the rails a little bit, but to put our. But I just want to make sure during this podcast we reiterated why, further explain why we call it a Ponzi scheme and how bogus it really is, and how it preys on the financially illiterate, and all that. But I think the outlook is that crypto is in trouble from a standpoint of the tokens themselves, right? Because I think people are seeing it for what it is, just like NFTs. People saw what it is from a standpoint of just using it for whatever, right? I think NFTs will evolve to what you say, hopefully, to apply to those things. I think tokens are going to get really tightened up because I think regulators are seeing the truth behind them. And we're going to see many more of these SBI figures being taken down, and whether they're the magnitude of CZ of Binance.
Oh God, I hope so.
Yeah, which I see he's been in trouble. I remember meeting him, and I'm like, "There's something off." And then I see people taking the technology of blockchain and all that and applying it properly and pairing that with AI. So that's the outlook. Is really crypto's in trouble from a financial standpoint, from a token standpoint. There'd be a lot more prosecution, a lot more of that, and I think people are going to see that is full of crap. And what we'll see is the technology being used properly, and I think that is where it's going to head. It's going to take some time. And look, I don't blame a lot of these young people who mean well of what they're trying to do, but I think once they grow up, they'll see and learn how the system really works and apply it differently, especially the blockchain and NFT as we discussed. So that's the outlook. But the ones that are still about tokenization and decentralization, I think they'll fall flat in their face, and I think they'll end up incidentally, some of them incidentally will run a Ponzi scheme because they got to be on par with the dollar, however they set it up, right? And they're losing funds, and I think it's one of those from a investor standpoint. Is the only reason we would ever touch it is if there's money we want to just waste. The money just throw around.
Yeah, I mean, I hopefully there isn't that much left when the feds are done steamrolling over everybody. Like I truly think SBF was the first one to get nailed to the wall over this, because he was. I mean, I think most of these people are ignorant, but I don't think any of them were as openly ignorant as him and his operation. I mean, you had Caroline, the math genius, going on a talk show. Well, I don't want to explain what a stop loss is. It's very complicated. It's not complicated. If it hits a price, sell. There you go. And you had SBF, playing League of Legends on a call, which, okay, fine, that's cute from a techno-anarchist, revolutionary innovator, in air quotes, point of view. But that's also immature douchebaggery. When he says, yeah, I moved client money from, A to B without telling them, and I didn't know. Okay, well, ignorance of the law is no excuse for breaking it. In a real grown-up financial institution, you would have ethics walls, you would have compliance departments, you would have an accounting department that doesn't, bookkeep billions of dollars in QuickBooks, which is awesome software. Nothing against QuickBooks. I love QuickBooks. I mean, I just bill myself for fun because I like using it. But QuickBooks is not something that you want to use when you have an operation of that size. So just the amount of ignorance involved made him the perfect target. But now that he's been made an example of, now I think the lawyers can go after the more sophisticated criminals, or at least the ones who feel that they're more sophisticated. Because why did the government not do anything for so long? Well, because they're not stupid. Okay, no lawyer, unless you're a public defender, no lawyer is going to take a case they don't think they can win. Right? If they drag you into court, they want it to stick, and they want to parade you out, do the perp walk, and make an example out of you. SBF gave them the perfect ammo to do that, and now they're going to use law and precedent and everything else in their toolbox to go after the bigger fish who think they're clever. And I, for one, I can't wait for it. I want to sit in front of the TV watching the trials with a tub of popcorn. This is better than Blockbuster to me.
Yeah, and don't you find it weird, because during our experience, we've met so many of these folks. Don't you find it weird, other than the big figures like SBF and CZ and Brian Armstrong, who I still challenge to a debate, by the way.
If he's listening.
Yeah, I mean, we call that out on Bloomberg. I know he listens to Bloomberg. Is how afraid they are to unveil themselves, real name, who they really are. Like, I find it fascinating with that, right? I mean, don't you, if you are creating something that is really innovative, don't you feel that you want to take pride in that? Like, when you take pride in something, you want your name out there. I mean, for the product we're creating, the financial product we mentioned earlier, which is not crypto, by the way, it's a real financial product that will be regulated. Decrypto. Yeah, that is really that's going to be regulated and legitimate. You take pride in what you do, and you want your name attached to it. So it's just strange, right, that they hide themselves behind that, and they try to create this illusion. And again, this is just tactics that are being used.
It's idiotic. You could tell this is all garbage when Do Kwon kept getting questioned by reporters, and every time they back him into a corner, it's like, well, you know what? You're too stupid to understand it. You're poor. Oh, I criticize you. Well, you know what? You're poor. Okay, now you compare.
And again, that's and the funny thing is, that is the opposite of what their mission is, right? The mission was to DeFi and help people rise out of the system and make money, but yet they act like that, which makes absolutely no
it's immature
sense.
And it's stupid and it's insulting. Why the hell would I buy your product if you're that much of an asshole, right? If you can't, it's the age-old adage: if you can't explain it to a 5-year-old, you don't understand it. Period. If you can't handle a reporter's question who's doing their job, like it's not like some jilted ex-lover that wants to humiliate you. They're paid to ask you questions. They're paid to ask you tough questions, because if you're claiming something that's revolutionary, much as in science, extraordinary claims require extraordinary proof. Yeah. So if you can't explain it, if your response is like, "Oh, you're poor," well, why is your stuff in the Virgin Islands or the Caribbean? Oh, because you're poor, and because they're more amenable to my crime. I mean, my financial product. No, screw all these people. They're going to learn how international law really works. And I really hope they don't throw them in Club Fed, right? That would be an absolute abortion of justice. Put them in San Quentin, put them in Leavenworth, or somewhere really nasty, right? Let them learn. That's how they're going to learn.
Yeah. So the lesson to our listeners here when it comes to crypto is don't touch it. Just don't. You're better off going to the roulette table in Vegas and making a bet there. But don't touch crypto. I don't care if Vanguard or BlackRock or whomever offer these products, right? They're extremely high risk, and it's ill-advised to do crypto. And you're much better off just putting your money in a roulette table. But we don't recommend that either.
Well, roulette has the highest house odds in the casino. It's like 6%. If you're going to gamble, play blackjack or hold'em, or something where you're playing the opponent. Actually, hold'em, I don't think the house plays. I think it's just the players, right?
Yeah. The house is deals,
right?
But the true thing you should do is, again, not financial advice, but the true thing you should do is invest in long-term investments, ETFs. And those sorts of things, and being fiscally responsible, and not fall into these fads and the get rich quick things, because you never get rich quick. It doesn't work that way. That's not how life works. And you can
get poor quick.
Yeah, you can get poor very quick. And don't fall for your short-term gratification desires, right? And that's and social media has definitely expedited the feel for that and the need for that, but don't fall for it, because you'll end up feeling much, much worse than not getting that short-term gratification. And that's another thing, part of our mission, and why we do this podcast, and why we're going to be releasing this new revolutionary product, is so that we can actually help everyone, everyday people, to succeed financially and to educate them. To help with financial literacy, because a lot of these schemes like crypto and other sorts, they thrive off of predatory behaviors and targeting folks who want the short-term gratification and financially illiterate.
Well, nobody wants to get rich slow, right? Like that's that. I mean, even as I'm saying that sounds dreadfully boring. Right, everyone wants to be a billionaire when they're 25, but sadly, unless you're a bank robber or one of the very, very few tech startups that actually makes it,
but even then, right? You look at us, right? I mean, it takes time to build companies. Yes, I've had successes in the past, but I've had failures, but it was never overnight. And you look at much larger figures, Jeff Bezos, Warren Buffett, Steve Jobs. It took them time. They didn't all of a sudden become successful quickly. It took them a lot of time to get to where they are. Now, yes, they made a lot of money at a quicker rate, but that's because they took higher risk from a standpoint of building a business. And that's why this country is great. It offers you a platform to build a business and to dream big, but you take on a lot on your shoulders to be able to get there. But for
Elon, everyone's favorite icon of the dirty rich, that's super popular to hate on right now. He took massive risks, more than once. And I gotta be honest, if I were in the position where he was in PayPal, I wouldn't have bet at all on Tesla or SpaceX. I'm like, what? Screw it. I'm taking my money. I'm going to go piss off.
No, exactly.
And live the rest of my life drinking coconut milk.
That's why he deserves to be the richest man in the world, right? Because he is doing things that people thought were the impossible. He's revitalized industries like the space industry. So even look at him. He's taken a step back from crypto, right? I mean, that's telling. Even he's taken a step back. Yes, he's joked around about Dogecoin and all that, but that's just who he is. He likes just playing around, and I think
he's just like Shiba Inus.
Yeah,
I don't blame him. They're adorable dogs.
Yeah, so I mean, he likes messing around. But no, so for our listeners, just And look, if you do want to dabble in it, just only use money that you don't care if you lose it. Now I know we care that we lose money, but that you're able to lose that money. Like if you lose that $1,000, $2,000, it's not going to affect you. It's not going to hurt you. Right. But overall, just don't even bother with crypto. And to the point you made about taxes, I want to make a clear point here is, no one wants to pay taxes, but we live in a society that benefits from it. And again, don't get me wrong, I do not like government in general. I'm one of the, because it's highly inefficient, effective. It's gotten so big, but there are positives, right? We need a government. We need lawmakers. We need regulation. We need police. We need a military. We need all that. And how's that funded? From a society that contributes to it, right? And so for all these crypto bros that try to evade it, it's really idiotic because you're not contributing to society. You're not contributing to the roads you're driving on, right? The clean air, the police that protects you, so all these things that benefit them, and they're not contributing to, just doesn't make sense. And
they're just petulant, Vin. Like, well, government's inefficient. I'm not going to pay my taxes. To your point, I actually like paying taxes. And I know that sounds idiotic, but I like paying taxes because it means I made money. Because I've been on the other side of that more than once, and it sucks. So are the roads the best? No, I think most of our infrastructure.
But at least we have an interstate system.
But we have roads. We have an interstate system. Depending on where you go, the roads are pretty okay. I know Los Angeles and Ann Arbor have some potholes that could swallow a small child. But yeah, you're absolutely right. These people are just being petulant little children, and they're going to find out petulant little children can still be tried as an adult.
Right. And look, I know the argument of say, well, all these billionaires and stuff evade taxes. Not necessarily. That's just a narrative. They do pay taxes, but they also pay taxes in different ways, and they contribute to society in other ways as well. So it's much more of a complex issue than saying, oh, they all evade taxes. And many of them say they don't mind paying taxes as long as it's fair, and as long as the government delivers. And that's why we vote. That's why we live in a system, a democratic republic that votes for lawmakers. And if you're not happy with taxes or inefficiencies of government, then voice your opinion and vote. Simple as that.
And if you're really unhappy, why don't you run for office and make the change yourself?
Yeah, exactly.
That's the thing, Van. Like I saw or read a while ago, like there's an article I think actually on Cracked.com of all places, which was a hysterical website. But the article said, list the 5 things that you value most, right? Whatever it is. And then make another list, like list the 5 ways that you spent the most amount of time last week. And then take the first list and throw it out because it doesn't mean anything.
Yeah.
Right. So there's people that are eat the rich, whatever, including lawmakers who are completely ineffectual at their own jobs. They just like to complain. They don't actually take any of this seriously. They don't actually take their own they don't eat their own dog food when it comes to social reform or anything of the sort. They just want the attention, and they want to whine, and they want to make people feel like victims, so they keep getting reelected. Right. And people themselves don't want to enact change because enacting change is hard, and it sucks, and it means struggle, and it means that you have to learn how to become an elected official. If you truly want to enact change, that means you have to learn how to negotiate with the other side of the aisle. And if you want the story of like AOC, for instance, and people love her, hate her, I don't give a damn. But to go from, was it a waitress or bartender?
And
to a congressional representative, that's not easy. You
have to give her credit for that.
Right.
You have to give credit for that. Absolutely. I don't care if you're on the right or the left. You have to give credit. Nancy Pelosi, right? She was a housewife, and then she, became one of the most powerful political powers in DC. So
for decades.
For
decades.
Your point is on, the point you made is on point. And there's also other ways. Learn the system, right? Join civil liberties organizations. Start one. I know we're involved in many civil liberties organizations because we're passionate about the First Amendment, the Fourth Amendment, and other issues, right?
Yeah.
And again, you have to create one, but you can get involved, you can contribute. There's so many of these organizations, and these civil liberties organizations have a lot of influence. And on the point of taxes, as a reminder to everyone, and we saw this headline, and actually, honestly, completely forgot about it, but luckily we have accountants. Is that there are new? The IRS has new tax brackets for 2024. So, really recommend everyone check the updated tax brackets because, yes, Thanksgiving's coming up, and Mariah Carey's already singing already.
Christmas decorations everywhere. I don't want to go outside anymore.
Yeah, but tax season's around the corner, sadly, and check the new brackets. So please do that. Please do so. But yeah, I mean, so wrapping up on crypto is just don't touch it. We told you many reasons why. If you do, focus more on the blockchain and the potential of blockchain and NFTs to apply in industries and can benefit, like you said, as an author. And then from a tax standpoint, don't feel bad about paying taxes. Now, I know, in my opinion, it could be a lot lower and the government could be a lot more efficient, but on that point that we just made, do something about it. Vote, vocalize it, demand your lawmakers. I mean, it's so easy to reach your representative. I mean, there's district offices everywhere. March in and say, hey, I don't like this. It's inefficient, and here's why. So, the rule of thumb that we've learned is if a congressman or a senator gets more than 10 inquiries in a short amount of time about an issue, their whole team gets on it. So get 10 of your friends or rally a neighborhood, and all of a sudden things will happen.
It's a very low bar to get their attention.
Exactly. So hopefully that helps people understand that. But now switching gears, what has happened?
What's the other bad news?
Yes, because the point of this, obviously, this podcast is to help catch up our audience on what's going on in the economy and finance and how it affects them. Since the last podcast, let's start with interest rates, job numbers, and what it means. In our last podcast, in the last podcast, we talked about facts versus fiction with the job numbers, and obviously numbers have come out since then. So what do you see with interest rates and jobs?
Well, first of all, massive shout out to J-Pow for getting interrupted by climate protesters and saying what we're all thinking. Let's just close the fucking door.
Yep.
Direct quote. My God, I never thought. I dreamed of the day that somebody in that kind of position would just talk like a normal person, and I finally got it. See, ladies and gentlemen, wishes do come true. But yeah, we do have this specter of, well, we're not going to raise rates now, but the door is still open for rates in the future to go up. Look, this is stupid. I think we're getting to the point where we're over the cliff. You watch the Roadrunner cartoons and the coyote's hanging there and he hasn't figured out there's no ground underneath him yet. Like, I think that's where we are. Rates should have been hiked a lot more aggressively over the past years. We've said that multiple times. I'll have that engraved on my tombstone. I don't care. But part of the problem is that if Powell is a political animal, whether he likes it or not, he cannot make decisions in a vacuum. And right now, the prevailing narrative is like, well, unemployment is low. The economy is strong. Look at how inflation's going down. And we mentioned before, the CPI numbers you actually have to dig into, right? Because they're different components, and some of the things that people feel the most, like, I don't know, housing and rent, have gone up, even though the overall CPI is going down. So you actually need to look into the data. And as far as the job market goes, like, yeah, we added so many hundreds of thousands of new jobs in the last quarter. Fine. Well, that's because a lot of people out there have 2 or more of them, and they still can't make ends meet.
Full time.
No,
it's not part time.
Was it 460,000 people have 2 full-time jobs?
Yeah, it's a record high, historically record high number of Americans working 2 full jobs. That's insane.
That's offensive to me.
Yeah, part-time we understand, of course, right?
Well, yeah, but the side hustle.
Right, but 2 full-time, that's what's irritating, is you don't see that in the numbers unless you dig deep. Most people look at the headlines. Oh, employment's going down or it's rising or whatnot. But if you crack down the numbers, it's not good. Americans should not be, or any individual should not be working 2 full-time jobs. That's a lot. I mean, I respect it because they're doing what they need to do to put food on the table and a roof over their head, but it shouldn't have to be. And also, that's why the job market's still tight, regardless of what the numbers you see, is because of that. People are struggling to find jobs, right? Whether it's full-time or part-time. And full-time jobs are getting laid off like crazy. It's starting to rapid fire.
Right.
And then whomever have those full-time jobs, a lot of them are having 2 of them.
Yeah, I can't imagine that 16 hours a day of work.
Yep.
And you can make the argument, well, how many of these people are teleworking and double dipping, which I actually didn't know was even a thing until like late last year. I think it's actually kind of clever. I don't know, but the fact is that you're spending 16 hours a day at work. You're sacrificing your sleep, number one, because you also have to build in commute time and time to make dinner and spend time with your family if you have one. Yeah, I think the effects of this are going to be a lot more than just economic. The economic effects are bad enough, but it's also the knock-on effects of just your general life. Human beings were not meant to just toil away endlessly, all day, every day like that. That's why in the industrial age we had no child labor laws. Like, how many people got chewed up by the machines because they were working 12, 14, 15, 16-hour days.
And that affects health.
Absolutely.
And when you affect health, it affects the system. Health insurance, healthcare costs, and debt grows because of all that.
Well, companies are laying off tens of thousands of workers, and then you have another headline from Bloomberg, actually just last week. U.S. job openings unexpectedly rise a second month to 9.6 million. Well, where do those openings come from?
Yep.
This is why you need to read past the headline. If I fire 10,000 people, well, guess what? My company now has 10,000 job openings. Does that mean that my company is in a strong position? No, because why the hell did I fire those 10,000 people in the first place?
Yeah. No, absolutely.
You have to look past the headlines. The fact that we have 9.5 million job openings does not mean that we are in a strong position as an economy. And the fact that headline unemployment,
and a lot
is
of those
still low.
Are part-time, by the way.
And a lot of them are part-time.
9 million that you just said are part-time. They're not full-time.
Correct.
And the participation is all-time low. And it's a recipe for not disaster, but really, really bad implications. And it's going to continue to hurt inflation, right? Because of all that. And, stepping back to inflation again with interest rates, to the point you made, I want to add to that, is that I think we're at a point, and you and I discussed this the past week, is that because the Fed did not rip the Band-Aid off, we're at a point right now where we really can't cut or we really can't hike again. Because if you cut, that's going to drive up inflation further. But if you cut, what would that do?
Well, if you keep hiking?
Yeah.
Right. If you cut, you ramp up inflation. If you keep hiking, which you should have, number one, I think the markets are calling bullshit on the hikes.
Yeah.
Right. Because it was the last Fed meeting, Powell said we're gonna hike rates and the market shot up. Like, no, you're not. So I think you have to hike rates to tamp down inflation. But we mentioned before the wonderful example. Do you want to get shot in the head or the stomach? You're gonna die either way, right? This country and every other country in the world, aside from what are politely called frontier markets, runs on debt, right?
Yeah.
We run on corporate bonds.
Real
period.
quick,
Yeah.
man, I laid you a softball to try and make a moment there, and you ruined it.
Well, that's what I do.
No, if they cut, inflation will drive up like crazy.
Yes.
And then if they hike it, it's going to cause the market to completely go haywire. And the cost of debt to continue to go up. Inflation. So either way, right now they're stuck. They're just.
Should we say the S word? Should we say the S word, Vin?
Go ahead.
All right, let me make it really dramatic and cut my microphone. Stagflation.
Hey,
how was that?
Bingo.
Was that scary enough? Should I do it again?
It's like the slot machine we talked about earlier, and when it matches, ding 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 ding. Yeah. So this is going to be a problem, and I think this is why. I mean, you look at there's a report of Bloomberg says U.S. consumer long-term inflation expectations reach 12-year high. The reason is because the solution is now out the door, and now we got to drag this out and suffer through it before it can rebalance itself. It's going to be an interesting ride. I think our listeners have to prepare for much longer term inflation and higher interest rates. Because even if they dip, even if they cut, your cost of everything is going to go up, and even if they hike, it's gonna cause haywire. So it's going to be interesting in the coming years, and I just think a lot of folks need to bunker down. And it's just sad because there's been all these warnings, and they did not study history. Apparently, they forgot about history. And we're going to suffer for it moving forward.
Yeah, well, it's I think people are being fed the wrong the wrong snack, right? You're saying, or not you, the talking heads that are in charge saying, well, look, inflation is coming down. They're talking about disinflation. They're not talking about deflation. Okay, at the end of the day, people want their 2019 affordability back, right?
Yep.
And that's not going to happen without a recession. Like, that is literally what a recession is. It is a deflationary pressure on the economy. It drives prices down. It drives everything to hell. And if you're at 100, you're not going to get back to 50 by continuing to go up. Right. It's not like the world. It's not like the globe. You can't get back to 50 by going up long enough to loop around. Sorry, flat earthers. And the only way to go down is with a recession. And we're way too hot. And screw the headline numbers. Read into the actual data. And the fact that Powell's doing nothing aggressive. I mean, yeah, it's frustrating. Honestly, at this point, I'm just kind of used to it. I'm used to being disappointed by everyone in this administration. But the only way they're going to wake up and, act is the fact that, nobody has any money, right? Like Gen Z, the cash cushion, we can't bag on millennials anymore. We have a new generation to hate.
Yep.
Their cash cushion shrinking. Their savings are practically non-existent. The housing market's a mess. And what's everyone doing, right? Well, okay, I have no savings, but I still need to eat. Whip out the plastic fantastic, and they start living off credit cards, and they start paying the minimum and just trying to make ends meet. And the fact that consumer revolving debt, meaning credit cards and things like that, are so high is terrifying. Like, I 2008, we had hell on earth because of the housing market. Do we have round two because of a credit revolver issue?
I think that's on. Yeah, I think that's on point because you look at the consumer behavior, at what they're purchasing and what they're giving up. The coming years are going to be fascinating with Gen Z and even us millennials, because you're starting to look at a different way. In '08, everyone was buying houses at a low interest rate, and everyone knows it. It was unreasonable. I mean, what was it? The Big Short, based on a true story. One of the strippers had 8 condos. Makes no sense.
I have 5 houses.
Yeah,
I don't actually know if there were any strippers with 5 houses. I'm sure there was at least one.
Right, unless you're one of those really big OnlyFans creators that make $1 million a month, I don't believe it. But I think this time around, what we're going to see is the disengagement of buying houses. If you look at a lot of these numbers and reports, a lot of consumers are giving up on major purchases like homes, but are increases in spending at Starbucks, right, on vacations, on those types of things. So I
avocado
think,
toast,
right, Amazon orders, avocado toast. So I think you're going to see a completely different version of '08. I think it's still going to be a major recession. I think you and I agree with that, but it's going to be caused by the shift in the consumer behavior because of stagflation, which we see happening. Stagflation will hit, and the poor decision making by policymakers, and we have to ride this out. The only way we're going to see the shift back into this American dream, owning a home, buying a home, and making big purchases, is once stagflation is over, deflation happens, and everyone suffers a little bit further before it comes back. But there is still hope, though. As well, we've reiterated to our listeners before, we're not doomsday people. We're just giving it reality. But if you look at the history of our country and the economy globally, it always rebounds. But
speaking of doomsday and Amazon, I think I'm expecting my order of 6 pallets of MREs for my bunker.
Right. What was it? Pour hot water, and all of a sudden, you have a
some of the
5-course meal
food you ever had.
5-course meal. Yeah. But that, I think, is an important answer. I want to reiterate to a lot of the skeptics that we've dealt with, who say, "Oh no, soft landing, economy is going to be fine." I think there was a Wall Street Journal opinion piece. The headline was, "The economy is great. Why are Americans in such a rotten mood?" Well, because everyday Americans
out of touch.
Yeah. Americans are hurting because you go to the grocery store or you go out to eat, you go get gas. It's expensive. You can't go around the street corner market like you used to without spending $100 at least, right?
Yeah.
And
just on eggs.
Just on eggs. So, but because of that, these big purchases are going to be on hold, and between the commercial real estate bubble that's going to hit, plus these big purchases from consumers being dialed down, I think that's going to be a major shift in what's going to cause stagflation to get worse, and this recession going to hit because of that. So, the housing bubble is going to happen, but it's not from what happened in '08. It's happening because of what's happening now, and it's a little bit of a different scenario. But this is why, I do have interest from our fund holding company in possibly Starbucks and McDonald's and Amazon because of the consumer behavior shift, which is interesting.
Yeah. Well, I think the problem, aside from, everything, for those who are watching on video, aside from, all that, like the Starbucks splurging is kind of scary to me because, yes, it's a little luxury. I love my venti iced non-fat caramel macchiato, so I had to actually count the syllables instead of just saying coffee. I think people are tilting toward a kind of like an attitude of nihilism, right? So they have it was another Wall Street Journal article. I think it was Kalshi startup that enables election betting. Like gambling is pretty damn high. I think it's at an all-time high.
It is.
When we talked before. Now, Yeah, look, I'm not a Puritan. I don't really care what people want to waste their money on. You just have to understand, the physics of the game. Okay, if you want to gamble, go gamble. Right, everyone knows 99% of gamblers quit before they hit it big, but understand that you're going to lose. Okay, if you're treating it as entertainment, great. If you're treating it as a way to pay your bills, I'm just going to be very blunt. You're an idiot.
Yep.
But when gambling spikes, it's bad for an economy where so many people have so few savings. And
Yep.
that doesn't matter if you lose $100 on roulette, or you lose $100 betting on an election, provided that Kalshi hadn't run afoul of the CFTC, you're still down $100, right?
Yep.
If you spend money on Starbucks because it makes you feel good, well, number one, hell yeah, it makes you feel good. Are you kidding me? What the hell do you think sugar's for? That's why I love Starbucks. I feel like a little kid again. But it's the easy decision that gives you the short-term gratification. But in the end, it's going to bite you in the ass, right? And how are these treats being paid for? Consumer revolving credit.
Yep.
So on my concern, and again, I'm not the expert in behavioral finance. I know this is going to piss off somebody who is.
I am, though.
Yeah, okay, fine. But like, my concern is if you instill this nihilistic attitude of like, screw it, let's go travel, let's go gamble, let's spend our money on Starbucks, the world's going to hell anyway, you kind of make that a self-fulfilling prophecy, right? I would much rather drink Starbucks than eat, a salt brick of ramen. But if the salt brick of ramen is what keeps me from going bankrupt, well, as someone who's actually been bankrupt, the Starbucks doesn't taste that good, right? I would rather have money and eat garbage because it's what I can afford than rack up credit card bills. It's like, well, I can always consolidate later. I can always do debt settlement. I can always just declare bankruptcy. I can always just not pay it, become insolvent. Like, that is going to rot us from within. So 2008, yeah, you can argue or not that, is the quote unquote big banks being greedy. Fine. I don't really care where anyone falls on that side of the line. But this one, if it's a revolver implosion, this one is being driven by consumer behavior. The banks are not putting a gun to your head and telling you rack up credit card debt and buy Starbucks instead of food. Like, you are doing that yourself.
Right. And I agree with that. And the only benefit of the doubt I give consumers is that we've created an environment that incentivizes them to do that. And and that's why I give a lot of blame to policymakers and to the abuse of the system by major players on Wall Street. Is they're setting up an environment for that, right? I mean, we've been since Bernanke in 08, right? We're just having this low cost debt buildup, and then policymakers just making more and more poor decisions that doesn't make sense economically, and this is why we're here now, and where consumers now rather gamble and rather splurge on those little things and buy big purchases like a home. People don't realize a home's not just a home; it is a major financial asset for you.
Major tax write-off too,
and a major tax write-off.
Interest. Yeah.
Absolutely. So, to consumers out there, we can't fully blame you, but at the same time, you can take responsibility and behave in a way in where you can thrive and survive. And by the way, that was the tagline. That was just something.
Thrive and just I don't know. I kind of like it. Yeah. I think you should put that on a shirt.
No, and I think that is really important for everyone to know is we'll get past this, and you can't think short term. Now, we're not saying don't take that vacation or don't take that Starbucks. Just put in a budget. Work a budget. Make sure that you know what your income is and what your taxes will be estimated, and create a budget that will not only put money in savings and some investment, but you can also enjoy yourself a little bit, but not throw money away and put you in a tight position. And I think that is a really important message we want our listeners to understand. Don't think of everything as doomsday and live in the moment. Things will get better. Things, one of my favorite quotes is, things happen, but we all move on. Right?
No, that's a good one.
Yeah, I mean, it's true. Yes, it'll happen, but look, we all move on, and it's history. So just be fiscally responsible, and you'll thrive. Right? You won't regret it, and things will come around. But to make another, but to reiterate that point, 2008 was 2008. I hate seeing a lot of these correspondents and the media continues to go, oh, this isn't 08. Well, it isn't. It is now. And yes, we have a really bad recession and stagflation. And the reason is not because of 08. The reason is because what we just talked about, consumer revolving credit, the behavior of shift of people not buying big purchases like homes, but they rather splurge on things like Starbucks and little mini vacations and Amazon purchases, right? The commercial real estate bubble and the cost of goods going up like crazy. That is, and credit card debt at an all-time high. Card payment delinquencies are all-time high. So all these data points are adding up, and like you said, the centralized point is consumer revolving debt, and that's what's going to cause the next big recession, which is coming up. It's because of that.
Well,
and also government debt, obviously.
Well, oh god, yeah, that could be a series of episodes. I think the Bloomberg article that was talking up the Starbucks purchases mentions people are dialing back purchases of things like refrigerators. All right, well, that's a really interesting example. I mean, we've seen the dialing back of cars purchases and things like that. Refrigerators was the first time I saw that as an example. But think of it this way. Okay, you go to Starbucks, you spend $7. Okay, my aforementioned venti iced non-fat caramel macchiato was $6.45 with tax. So $7 for a cup of coffee is not something I just pulled out of my ass. But the difference between a cup of coffee and the aforementioned refrigerator is that one of them is actually a necessity. Okay, your food is not going to rot if you don't buy a Starbucks. So you have something called opportunity cost that I think people are overlooking, right? And the thing with these small little luxuries is that it doesn't feel like anything, right? Like we live in a world where you can finance a pizza, for God's sake. Like, okay, that's terrifying on so many levels.
Yeah.
But we also talked about it. The marginal
Oh, by the way, don't do that, please.
Yeah, do not finance pizza.
Yeah,
if you can't afford it, just cook. For God's sake.
Companies like Affirm, right? Is it Affirm and all these pay now, buy now, pay later?
Yeah, all the BNPLs.
Sorry, not that. Buy now, pay later. Yeah. All these companies can go to hell. I really do not like them because, again, like crypto, they're predatory.
Yes.
Like if you cannot afford, now look, loans and mortgages that's different, but in car loans, right? But to finance pizza or small purchases, right? No. Even let's say a gaming system like PlayStation, that is idiotic beyond belief.
Well, it's nefarious.
It's irresponsible. Yeah, nefarious. It's just again creating these poor behaviors, and it's just sickening to see that.
Well, it's like we talked about. I don't know what the proper economic term is. I'm sure somebody does because I'm not the only person in the world that studies economics. But I call it enabling more marginal consumption, right? So if it's the end of the month, you paid all your bills, everything, whatever, and you've got $100 left, but you want something that's 150. Let's assume credit cards are not an option right now. You say, well, crap, I want $150 something, but I only have $100 left. So of your circle of budget, you've cut out a little square of all your expenses, and what remains is the $100. All right, well, you can't buy a $150 item with $100, right? Maybe you can throw in a goat or a chicken if you're a crypto bro, because that's what you're enabling. But you said, okay, well, screw it. I have to delay my consumption till the next month. At the next month, I'll have $100 left after I pay off all of my bills and all my other expenses. Then I can buy that $150 item, and I got $50 left over. Okay, what these buy now, pay later vultures are doing is that they're saying, well, you can buy the 150 thing now, but you just have a nibble. So your $100 left over is now 90. Okay, you just pay off over time. Well, okay, well, what if I want this other thing that's 300? I've got 90 left. Can I have a mechanism that enables that marginal consumption? Can I take that 90 down to 70 and get the $150 item and the $300 item now? Well, now you don't have to delay consumption, right? Because you can, if your income is a circle and your expenses are filling that circle, now you can fill more of that circle. More of your income can be used for consumption. That's great, except for the fact that now it lulls you into this mentality of, well, crap, I can finance a 6-pack of Mountain Dew, which is sadly not a joke. I actually saw that. That's disgusting on so many levels. If it was a 6-pack of root beer, maybe I'd care. But now you're enabling this incremental consumption all the way out to the edge, right? And that's horrible. You get your stuff now, and that's great. I don't want a PS5 in 6 months. I want a PS5 today. Right. But now when you get hit with an emergency or you get hit with an unforeseen circumstance, you're on the hook for all those little payments. Is that any different from a credit card? Functionally, no, because I'm not talking about the business model. I'm talking about you, the consumer. Functionally, there is no difference because you're getting paid and you're doling out for bills and expenses. A BNPL it's no different than a credit card. Okay, but when you start thinking about it, and now we go back to the $7 cup of coffee, what are you actually giving up, right? That's the definition of opportunity cost. What am I giving up to get something else? Okay, if you spend $7 a day at Starbucks every workday of the month, 20 days, that's almost $1,700 a year for coffee. All right, that's a hell of a fridge, going back to that article, or I don't know, that's almost $1,700 that you don't spend, that you can spend on something else without going deeper into debt. Do I want $1,700 worth of coffee, or do I want a $1,700 plane ticket, which, that could be first class round trip for shorter destinations?
It depends. I mean, I don't know.
If it's on Spirit, I may not make it to
airline tickets are getting out of hand. Yeah.
But it's when people are making these big purchases, they feel it because, like, oh my God, I'm buying a $30,000 car. Oh my God, I'm spending $2,000 on a fridge. Or it's the psychological hit. They're like, crap, this is a big expense. But they're getting nibbled at, and they don't realize it.
Yeah, and it's and the sad thing is that going back, it just popped in my mind. When you said this is a consumer revolving debt issue, it truly is. Not only from the consumer behavior standpoint, but you're seeing financial institutions now acting on it. These synthetic risk ledger trades that are happening amongst banks and private equity firms and hedge funds kind of verifies that, and it's really scary because it's getting interesting.
Right.
And adding to the point that we made about what is going to cause this major recession, yes, poor decision making from the Fed, that will cause stagflation. The cost of debt going up, and the government debt going out of control actually affects all of us. And then consumer debt, but these behaviors that continue to happen, like the synthetic risk trades, and
they're unfunded swaps,
right?
They're swaps with no money behind them. You pay later if they're executed. Stop doing that sounds like a terrible idea.
Yeah, which we saw in 08. So there are similarities to 08 from that standpoint. And that's just, and really that's the failure of regulators as well as a lot of these financial institutions, right? And so that's why I can't fully blame crypto and all these new quote unquote innovative projects, because they are the products of being screwed over by the system. And it causes them to have foggy glasses, right? Foggy vision, because the system does work. It's just it needs to be executed on, like regulation and all that. So the scary thing about this next recession is that you're going to have a combination of the behaviors like 08. It's just not mortgage-backed securities, but I mean, that's starting to pop up again. But these synthetic risk transfers and behaviors and these risky bets, and for example, Bank of America has $650 billion on their books that is unaccounted for, that they're on, that it's
that's the duration mismatch.
Yep. And then you're seeing now consumer behavior acting on top of that, right? It's not that they're getting screwed over by these institutions. Now it's them too. It's now both worlds acting. Three parties involved now. It's the Fed and policymakers not making the right decisions or ripping the Band-Aid off, and poor policy making from that standpoint. And two, not actually regulating and holding these institutions accountable, which leads to number two, these financial institutions in Wall Street and all of them doing these synthetic risk transfers and all this crap. That sounds like what we've heard in the past that caused recessions and financial collapses. And number three, now you have consumers behaving that way, and where they're doing this buy now, pay later. They're not buying big purchases, right? And they're buying the short-term gratification, and they're adding on to their debt, adding on. So that's creating a trifecta of a economic storm that's going to be really ugly, which is probably category 4, category 5.
We're going to need a new scale.
Yeah, exactly. And I think that is something that's not being spoken of enough. No one's really covering that, and I'm glad we are. And it's going to be interesting to see what happens. Now, like I said, we'll get through this. It's just a matter of when is this going to hit and how long is it going to hit. But if you're financially responsible and you're doing the things that we recommend, again, not financial advice, just recommend, you're going to be fine even during the downshift, because you're going to have more purchasing power when things go down, because things get cheaper when it goes down, and you're going to be in a good position. So it's going to be an interesting next couple of years, but I do think this is all going to come into light. I don't know when you think, but I think it's going to come into light around Q3 of next year.
Yeah, I'm still bearish on that. I still think it'll be 2024. No one else seems to think that way. We're the bubble boys, but the simple fact is that we're addicted to this stupidity of easy money. Everyone's like, "Oh my God, mortgage rates are 7%." Well, what the hell were mortgage rates in the 90s? What were mortgage rates prior to the QE poison pill that we got fed? I don't think we as a society know how to deal with what used to be normal economic conditions. We're accustomed to punting and just kicking the can down the road. It's like, oh, let future America deal with that. It's not our problem. Well, it's a lot like racking up credit card debt and only paying the minimum, right? You're not going to tickle the tail of the dragon forever. And the longer you do it, and the more pissed off that dragon gets, the more painful it's going to be when it eats you. And I think, unfortunately, that may be where we are. And,
perhaps, as you were making your points there, perhaps what we're about to see is a major correction from a standpoint of decades of again, you said cheap money and poor decision making, policy making, and also a shift in technology. Right, social media has caused a lot of shift in human behavior. I think what we're about to see is a major correction to how the system should be and how it was prior to this cheap money. I think that's really what it's going to be. This next major recession is going to be a major reshift into what it needs to be, right? How anything like physics or or anything, whatever action that happens against the what's supposed to be, it has to rebalance. Everything has to be rebalanced. It's just the way the world works. It has to rebalance.
Yeah.
And I think what's going to happen is we're going to see a major rebalance, in which we call it a major recession, but it's going to be a buildup from all these years. It's not going to be from 2008. It's not going to be from COVID. It's not going to be it's from decades of not abuse, but just from a unbalanced financial environment and system.
Sure.
And a reckoning is coming, and now we got to rebalance. That's just how the world works. And I bring up physics because physics is an actual real thing that I think schools should teach more of, because I see a lot of things in life is like in physics, right? Whenever
physics is liberal propaganda.
So
science is poisoning our children with chemtrails.
Yeah. So like science, right? Things have to rebalance when you mess it up. It just has to.
Yeah. No, you're absolutely right. I was gonna say I reiterate the best movie line ever is from Doctor Strange, the first one, not that garbage sequel where I'm gonna slaughter his name, but the actor that plays Mordo, Chiwetel Ejiofor, something. I
can't pronounce it either. So
I did my best. I love his acting, but he's like, the bill always comes due, always.
Yep.
Period. And that's the problem. Is that we've forgotten. When we haven't forgotten, we're denying it, and we are continuing to tell ourselves that we can pull it off. We just need some new synthetic transfer instrument. That whatever, you have a moral hazard, because the people who are doing these things know that if they screw up, well, the government's going to bail them out. Okay, well, I mean, in China, and I don't ever speak very fondly of communist countries. In China, when they found out that somebody was tainting, I think it was baby formula, they executed him. And it's like, okay, that's a bit strong, but at the same time,
it sends a clear message.
It sends a very clear message. Here, you screw up, and millions or hundreds of millions of people get their asses handed to them financially, and you get a bailout.
Yeah, and one person goes to jail. That was in 2008. One person, one poor guy goes to jail. But meanwhile, again,
that was the guy that had no friends. By the way,
exactly.
I'm positive that was the only guy that was trying to sound the alarm.
Yeah, no, exactly. And the reason why we call crypto bros is because they're just they're just like finance bros. It's just they behave the same. It's just they have different delivery mechanisms of what they're doing.
The jackets are not as cool. They don't have the puffy vest.
No, they just have baggy t-shirts and
whatever pajamas everywhere.
Pajamas, yeah, exactly. Trying to act all anti-hero.
Okay,
Tay. You have to say Taylor Swift because your ratings go up, and all of a sudden you have the Swiftie supporting you. So there you go. Hopefully that drives up. Our numbers are really good, actually. So
good.
I really want to, we want to give a shout out to our listeners, all the thousands of people listening. We never would have thought thousands already would listen to our podcast. So we really appreciate the love and support, and we hope you share with your friends. And
how many of those are listening to the podcast to help them fall asleep? I don't know, and I don't care. Just
I was going to say, because we don't do
total streaming time must go up.
I was going to say, because we don't do ocean waves, where they're like, whoosh. We don't do that.
No, we it's the ASMR version of budgeting.
It's not that hard. But yeah, I think, closing words, this is a longer podcast than usual, but we actually had many people tell us it's too short and they want us just to keep going. They enjoy the long podcast from us.
Eventually they're going to be 8-hour episodes. We're just going to sit here and smoke weed the whole time.
Okay, this isn't the Joe Rogan experience. Well, we would love to be on Joe Rogan, or Joe Rogan joins us someday.
I don't think we're on his radar yet.
No, not yet. But no, we really appreciate our listeners, and we hope that our podcast helps you provides you a better perspective and educates you on a lot of these issues and key financial tips. But I think, to recap this episode, it is, number one, do not touch crypto. Absolutely do not. Just don't do it.
Not even his toilet paper.
No, it's herpes. All right. Crypto is herpes. All right. Number one, do not touch crypto. It's financial herpes. Number two, please double check taxes, because 2024 rates are different, but don't feel bad about paying taxes. If you just don't like the rates or how your money's being spent by government, do something about it, right? Get involved in politics, all that, or demand your lawmakers to do something about it. But taxes does benefit society, because that's how we get roads, law enforcement, all that. And number three, it's this upcoming super recession, or really bad recession, is really going to be a major tectonic reshift, because we've been abusing this system so badly for decades that it has to finally reshape or rebalance, because as Doctor Strange movie said, which is true, the bill comes due no matter what. And just budget. I mean, everyone just, we're all falling into these short-term pleasures. And look, when I say don't do it, it's just, if it's within budget, if you can only afford to have one Starbucks a week and one night of going out a week, then do that. But budget it in, and you'll thank us later, because you'll have more luxuries along the way, and you won't have to worry about emergencies, because you have that money there, and those sorts. And listen to our previous podcast. There's ways of, when you save that money, to earn higher interest rates, right? Capital One savings.
But again, none of that's financial advice.
Yes, U.S. Treasury bills, S&P 500 ETF. So there's many ways that you can earn on that cash that's sitting there. Anything else, Willie?
No, I think we've filled our listeners with enough fear for the day.
Sounds good. But turn that fear into opportunity, everyone.
There you go.
Take care.